Enquiries of management and others within the entity. The auditor may also obtain information or other different perspective, identifying and assessing the risk of material misstatement through enquiries of others within the entity or other employees with different levels of authority. Directed towards TCWG or directed towards internal audit personnel, directed towards employees who are involved in initiating, processing, or recording of complex or unusual transactions, and then directed towards in-house legal counsel, directed towards marketing and sales personnel. So 5% I'm going to inquire within the entity. Who are those? TCWG, internal audit person, initiating and recording, the employees initiating and recording the complex or unusual transactions, and then in-house legal counsel, marketing and sales personnel. Analytical procedures. Analytical procedures are performed as risk assessment procedure, may identify aspects of the entity which the auditor was unaware and may assist in assessing the risk of material misstatement. Then observation and inspection. Observation and inspection may support inquiries of management and others and may also provide information about the entity and its environment. What are such procedures? Like I have to get things from the entity's operation. I have to observe the documents and inspect the documents. I have to inspect the reports prepared by the management. I have to observe the entity's premises and the plant's facilities. Information about obtained in the prior period. Auditors' previous experience within the entity or the others performed in the previous audit may provide the auditor with information about such matters such as past misstatements and nature of the entity and its environment, significant changes that the entity or its operation may have undergone. And then discussion among the engagement team. What I'm going to discuss with my engagement team, I have to provide an opportunity with the more experienced engagement team members to share their insights based on knowledge. See, everything that is knowledge transfer, right? So I have to provide an opportunity for the more experienced team member to share their insights. Allow the engagement team members to exchange the information about the business risk. If they find information, you have to share with the other people. Assist the engagement team member to gain a better understanding of the potential of material misstatement in specific areas assigned to them, and then provide a basis upon which the engagement team members communicate or share new information. See, I could give the medium of communication. I would say that you record all these things in some Word document, and other share, which is located in a shared drive, so that other persons can also refer to it. Okay, so it is also both documented and it is also communicated there. And it is also not always necessary for or practical for discussion to include all members in a single discussion, nor it is necessary for all members of the engagement team to be informed of all the decisions reached in the discussion. The engagement partner may discuss with the key members of the engagement team, including if appropriate specialists or the responsible for audit components, while delegating the discussion with others, taking account of the extent of communication concern necessary throughout the engagement team. Agreed by the engagement partner may be useful. Okay, then industry, regulatory and external factors. What are the things? Industry factors: market, competition, cyclical or seasonal activity, product technology, energy, supply cost. It's less important. Okay. Similarly, regulatory factors. What are those? Accounting principles, and then regulatory framework, legislation and regulation, taxation, government policies, environmental requirements affecting the industry and its entities' business. Then other external factors. Examples would be general economic factors and interest rate, availability of financing, and inflation or currency revaluation. Nature of entity. An understanding of the nature of entity enables the auditor to understand such matters as what are the complex structure are there, what are the ownership relations between the owners and other peoples in the entity. Okay, what are the things the auditor may consider when obtaining an understanding? What are the things the auditor have to consider while obtaining an understanding of the nature of the entity? One would be business operations. Okay, business operation. I will see. You will note this main heading. Okay, you put a heading as the examples of matters the auditor may consider when obtaining understanding of the nature of the entity. Okay, if it is a 4-mark question, it is more than enough to write 2 points under each, 2 examples for each. Okay, business operations is you could take as nature of revenue sources, a product or service, and product mix and geographic mix. Product mix and geographic mix, including the transaction of the related parties. Investment and investment activities, planned or recently executed acquisitions, and capital investment activities. Financing or financing activities, major subsidiary associated entities, including consolidated and non-consolidated structures, and use of derivative instruments. Financial reporting such as accounting principle. Okay, and then revenue recognition practices, fair value, foreign currency, unusual transactions. Then significant changes in the entities from the prior period. Nature of special purpose entity. There could be special purpose entity known as Special purpose vehicle, right, is an entity that is generally established for narrow and well-defined purposes to effect a lease or securitization of financial assets or to carry out the research and development activities. Okay. So here the entity on behalf of the special purpose entity have been created, may often transfer the asset right to use, right? The financial reporting framework often specify detailed consider a deep amount to control or circumstances under which a special purpose entity should be considered for consolidation. Those will be accounted for. Now, an understanding of the entity selection and application of accounting policies may encompass such matters such as what are the methods I'm using, what are the effect of significant accounting policies, what are changes in accounting policies, what are the financial reporting standards that are being applicable to me that are new. Okay, then rest all is small, small. Okay, not big. Here, you'll check this one. Example of matters that an auditor may consider when obtaining an understanding of the entity's objective strategies and related business risks that may result in risk of material misstatement of the financial statement include what are those industry developments? See, those are objective strategies and related business risks. I'm going to obtain understanding and what are the matters that will be understood. One will be industry development, nature of new products and services, expansion of business, new accounting requirements, regulatory requirements, current and prospective financing requirements, use of IT, effect of implementing a strategy, particularly any effects that will need to new accounting requirements. Okay, then examples of internally generated information used by the management for measuring and reviewing the financial performance. What are the internal generated information? Okay, which the auditor may consider, which the management is currently using for measuring and reviewing the financial performance. One could be KPI, period on period financial performance analysis, budgets and forecast, employee performance measures, comparison of entities' performance with that of competitors. We would have read it like general nature and controls 11 to audit, nature and extent of relevant controls and components of internal control. What is the purpose of internal MCQ? Okay, not a question but MCQ. What is the purpose of internal control? And reliability of entities, financial reporting, effectiveness and efficiency, compliance and safeguarding of assets. Reliability and efficiency, compliance and safeguarding of the assets. What are the limitations of internal control? What are the limitations of internal control? Internal control, no matter how effective, can provide entity only with reasonable assurance. Only with reasonable assurance, likelihood of their achievement is affected by the inherent limitations of internal control. These include realities that the human decision making can be faulty. Breakdowns in internal control can occur because of human error. For example, there's an error in the design or change in the control. Equally, the operation of the control may not be effective. Okay, so where information is produced, so it's not effectively used because the individual responsible for reviewing the information does not understand its purpose and fails to take appropriate action. Controls can be circumvented by collusion of two or more people or inappropriate management override of control. Okay, then in deciding and implementing the control, management may make judgment on the nature of the extent of the control it chooses to implement and the nature and extent of risk it chooses to assume. There are 4 points which we can get it from here. One is reasonable assurance and there are inherent limitations of internal control. It could be because of human error and either because of direct human error in decision making or in the operation of control. Controls can be circumvented by the collusion of two or more people or by the management override of control. And it is up to the management to decide the nature and extent of controls and also the nature and extent of the risk to be assumed. Division of internal control into components. What are the components of internal control? Control environment, risk assessment process, information system, and including related business activities, control activities, and monitoring of controls. What we have read, right? Prism. Control environment, risk assessment procedures, information system, control activities, monitoring of controls. Okay. Generally, IT benefits an internal control by enabling the entity to consistently apply a predefined business rules, enhance the timeliness, availability, and accuracy of information, facilitate additional analysis of information, enhance the ability to monitor the performance, reduce the risk that can be circumvented, enhance the ability to achieve effective segregation of duties. What are the benefits of IT? One is apply the predefined business rules consistently, enhance the timeliness, availability, and accuracy of the information, facilitate the additional analysis, enhance the ability to monitor, reduce the risk that the controls will be circumvented, enhance the ability to achieve segregation of duty. What are the risk specific risk? Reliance could lead to inaccurate processing of data. Okay, inaccurate processing of data. We will read only the keywords. Okay, but you at least give one time read to the sentences. Okay, inaccurate processing of data, unauthorized access to data, possibility of IT personnel gaining access to privilege. gaining access privileges beyond those necessary to perform their activities. Unauthorized changes to data, changes to systems and programs, failure to make necessary changes to systems and program, inappropriate manual intervention, potential loss of data or inability to access the required data. Okay. Let's repeat. Inaccurate processing of data, unauthorized access to data, gaining additional access privileges, unauthorized changes to data and master files, unauthorized changes to systems and programs, failure to make necessary changes, inappropriate manual intervention, potential loss of data, or inability to access the data as required. What are the manual elements in the internal control that will be most suitable? Large, unusual, or non-recurring transactions, where the judgments are required, right? Large unusual transactions, circumstances where errors are difficult to define. In changing circumstances, control responds to outside scope of existing automatic control, monitoring the effectiveness of automatic control. These are areas where manual intervention is required. Okay. Then, here, this is again an important question. Factors relevant to the auditor's judgment about whether a control individually or in combination with others is relevant to the audit may include the following. What are the factors have to consider to check whether a particular control is relevant for the audit? One, materiality, significance of the related risk, size of the entity, nature of the business, then diversity and complexity, applicable legal and regulatory requirements, circumstances and applicable component of internal control, nature and complexity of the internal control, whether and how the specific internal control, individually or in combination with others, prevents or detects or corrects a material misstatement. Let's repeat. Materiality, significance of the related risk, size, nature, diversity and complexity, legal and regulatory requirements, circumstances and other applicable components of the internal control, nature and complexity of the internal control, and whether and how a specific control, individually or in combination with others, prevents or detects a material misstatement. Okay. Then, risk assessment procedure or to obtain an audit evidence about the design and implementation of relevant control may include same inquiry, observation, inspection, and tracing the transaction through the system relevant to the financial reporting. Elements of control environment that will be relevant when obtaining an understanding of the entity. I'm going to communicate enforcement of integrity and ethical values, commitment to competence, participation by TCWG. So the areas I have to check. See, I'm going to understand what are the elements of control environment that will be relevant for this obtaining an understanding. One would be how am I going to communicate the integrity and ethical values, commitment to competence, participation by those charged with governance, management philosophy and operating style, organizational structure, assignment of authority and responsibility, human resource policies and practices. Then we'll move on to the next one. Yeah. See, the information system relevant to financial reporting objectives, which includes the accounting system, consists of the procedure and records designed to establish, initiate, record, and process the report entity transaction, resolve incorrect processing of transactions, account process and account for system overrides, transfer information from transaction, capture information relevant to the financial reporting, and ensure information required to be disclosed is properly summarized and appropriately reported. Okay, then. Communication. Communication by the entity of the financial reporting roles and responsibility of the significant matters relating to financial reporting involves providing an understanding of the individual roles and responsibility, internal control over financial reporting. It includes such matters as the extent to which the person will understand how their activities in the financial reporting information system relate to the work of the others and the means of reporting acceptance to appropriate higher level within the entity. Communication may take form as policy manual, financial reporting manual, and open communication channels helps to ensure exceptions are reported and acted upon. Okay. Example specific control activities. It could be again MCQ. Okay, what are the control activities? Authorization, performance review, information processing, physical controls, and SOE, that is segregation of duties. Then here, IT, general IT controls, data center and network operations, system, software, and acquisition. This is there also in the automatic chapter. So again, areas you will get one question, single question. General IT controls, data center, network operation systems, software acquisition, change and maintenance, program change, access security, application system, acquisition, development, and maintenance. You then have Use of assertions. Assertions used by the auditor to consider different types of potential misstatement that may occur fall into the following three categories. Assertion fall into following three categories. One, it is about class of transactions. We have read occurrence, completeness, accuracy, cutoff, classification. You all will think from where the faculty member take this. It is from SC 315. Okay. It's like assertions are about occurrence, completeness, accuracy, cutoff, and classification. This could be an MCQ. You could get as all transactions. See, okay, all transaction events have been recorded in the proper accounts. But what is the relevant assertion? It is classification, account balances, existence, ERCV, existence, rights and obligations, completeness, valuation, and allocation, presentation and disclosure, occurrence, rights and obligation, completeness, classification and understandability, accuracy and valuation. Then, risk of material misstatement may be greater for significant non-routine transaction arising from the masters. Greater management intervention, greater manual intervention, complex calculation and non-routine transaction. Where the management is involving more, where there is manual intervention is more, complex calculation and nature of non-routine transactions. Non-routine transactions, transaction outside the normal course of business. Okay, revision we have discussed, the documentation also we have discussed. I mean the original paragraph itself, right? Now we are going to end with one last discussion, which is okay, two last discussion. Okay, no, this we have already discussed, right? Control environment comprised of the ethical, integrity and ethical values, commitment to competence, participation by those charged with governance, management philosophy and operating style. We had one set of question for this, right? Then organizational structure, assignment of authority and responsibility, human resource policies and practices, and the last one was this one, right? Then here, this was a question, right? In the ISM itself is there. Risk can arise or change due to circumstances, change in the operating environment. Seven changes, I think. Some, yeah. A change, new or revamped information, rapid growth, new personnel, revamped information, new technology, new business model, and then new accounting pronouncement. Five new, okay, new personnel, new or revamped information, new technology, new business model, product or activities, new accounting pronouncement. One change in operating environment, rapid growth, corporate restructuring, expanded foreign operation. These are the points, okay. I guess around 9 points is there, right? New personnel, new or revamped information system, new technology, new business model or product or services, new accounting pronouncement, one change in operating environment, rapid growth, corporate restructuring, and expanded foreign operation. Okay, what is the question for this? Anybody remembering? Yes, correct. Risk can arise or change with circumstances following. Good. Now, let's again move on to the one last question, which I'm thinking to get it, but yeah, this was the one. Conditions and events that may indicate a material misstatement. Conditions and events that may indicate a material misstatement. Risk of material misstatement. Operations in regions that are economically unstable. Operations in regions that are economically unstable. Exposed to volatile market. See, this you can read and remember at least 5 points. Okay? 5 points enough. Okay. Operations in economically unstable area. Volatility or high degree of complex regulation. Going concern liquidity issues, constraints on availability of capital and credit, changes in industry and requirement, supply chain changes, developing or offering a new product or service, expanding into new location, changes in the large acquisitions or reorganization, entities or business segment that are likely to be sold, complex alliances, one joint venture, use of off-balance sheet item SPV, significant transaction with the related party, lack of personnel with appropriate accounting and skills, then change in key personnel, deficiencies of internal control, inconsistencies between the IT strategy and business strategy, change in IT environment, installation of new IT systems, enquiries and it is operation by the regulatory or government bodies, past misstatement, significant amount of non-routine or non-systematic transactions that are recorded based on the management's intent, application of new accounting pronouncement, accounting measurements that involves complex process, events on transactions that involve significant measurement uncertainty, pending litigation and contingent liability. Out of this long list, you can remember at least 5 to 6 points. 5 to 6 points. Okay. If you ask me, I will say what are things? A significant transaction with the related party, right? One. Okay. Then other one could be going concern liquidity issues. Okay, related with all the standards. Okay. See, you have a standard for related party. So significant transaction with the related party, going concern and liquidity issues. Okay. Then pending litigation and contingent liabilities. Okay, significant measurement uncertainty. Okay, new then you have significant amount of non-routine, non-systematic transactions which are recorded on the basis of the management's intent. These could be the 6 points which could remember. Okay, I think we have got 6 points, right? Going concern liquidity issues, significant action with related parties, and litigation, pending litigation and contingent liability, even in transactions that involve significant measurement and uncertainty, transactions are recorded based on management intent, significant amount of non-routine and non-systematic transactions. So with this, I guess we have completed all the essays, 315 bullet points. Let's check once here if all the points have been covered. If yes, we will conclude this video. Call it as an end. Okay. Yeah. I guess every point is being covered. So with this, we have covered essay 315, one of the most important channels in CA final level. So please listen to this video again if you want. Okay. Not, it's like an investment and not an expense. Okay. Thank you so much.